Hi, and welcome to the Stockscores Market Minutes. This week, I'm going to talk about one of the biggest mistakes that hurts the performance of traders and investors, and I'll give you some solutions to solve the problem. Of course, I'll also do my normal market analysis. We'll figure out if the stock market is likely to continue higher or lower and what areas of the market are worth considering. And then finally, we'll walk through the day trade of the week on DUO to give you a sense of how you can make money in the market in the short term using some of these tactics. All right, well, let's get into this week's topic, which of course is all about a big mistake that traders make, and it is the fear of missing out. It is what causes traders to chase stocks higher that are moving quickly, to take low quality trades that are really not likely to work. And in my experience, it's really the most costly mistake that traders make over and over again. What you have to do to overcome this problem is very simple. Have a written strategy that you have tested with clear rules to follow. So for example, if I'm day trading the market, I will have a set of rules. I could write them on a napkin, they're not complex, for when to buy, when to sell. And more than that, I also create a checklist, because in the heat of the moment, when a stock is moving quickly, when the market is active, when the money is on the line, it's very easy to forget what your rules are. And by having that visual checklist to go through and say, okay, is it breaking out? Is it trading abnormal volume? Is it making an action candle? Some of these things we'll talk about at the end of the video when I show you the day trade of the week. So I do all of those things methodically, going through, having a process step by step to identify trades. That way, we take out the emotion of the trade by implementing a mechanical, methodical process. Now, the next thing that I think is important is to not take more risk than you are comfortable with, and most importantly, to be present. Now, this sounds like a yoga class, but to be present, I mean by that, don't think about what's happened in the past, and don't visualize what might happen in the future. The reason we have FOMO is because we see a stock moving quickly and we're thinking into the future that this stock is likely to go higher. Or we're referencing a past stock that had really good performance that did well in the same circumstances, so we think that because it happened in the past, it will happen again. If you're simply just present, if you're looking at the market as it is right now, the stock as it is right now, and whether it meets the rules of your strategy, which you've tested and you know works over a large number of trades, then you are in the moment and you're going to make a better decision without the fear of missing out. All right, well, let's get into this week's market analysis, because there's some interesting things going on in the market. I'm watching NVIDIA, and of course, talked about this last week or perhaps 2 weeks ago, when the stock had good earnings and yet it still went down and it continues to go lower. And that could be a catalyst for some selling pressure. Now, we know that the market historically is weakest in the month of September. And so the question is, do we see signs that the market is likely to have weakness again this month? So to answer that question, we're going to jump to the Stockscores website. And a reminder while we're here, always make sure, if you're not already subscribed to my free weekly newsletter right there, I pick stock picks. They've done very well over the years, so watch that. It's free. Make sure you're registered for that. But what I want to jump into is the chart of the S&P 500 first. And here you can see that the trend is still up, right? We don't have any break of trend. Now, if we were to compare that with NVIDIA, NVDA, there you see, and let's just do this on a 3-year weekly time frame. There you see that this trend line has been broken. And that means that we may see the stock pull all the way back down to there. Could that be a catalyst for weakness in the overall market? So the S&P is still strong, but the NASDAQ, which is more dependent upon these large cap tech stocks, we see is not performing as well. It's making a little double top here. It still has rising bottoms. It's still bullish, but it is stalling the last 3 or 4 weeks, and we could see it start to move lower. What you want to watch for on the NASDAQ is if it breaks through this floor price right here. If it starts to move down through that after making this double top, we could see some weakness. I'm not concerned about that until it happens. It hasn't happened yet, but something to watch for. Let's take a look at the small cap sector. Now, the small cap sector, interestingly, is outperforming the larger cap stocks. And for many months, maybe perhaps even years, the small caps have underperformed the large caps because of interest rate policy. But we're now starting to get a sense that interest rates may get cut soon, and that's why this chart is moving up from left to right. Remember the NASDAQ? It was going sideways. The S&P was slightly up. The small caps are outperforming, and so I think that's an area to look for opportunity. Let's take a look at the Canadian market, which is heavily based in commodities, and we'll see some of those commodities are doing very well in just a moment. But you can see here on the Canadian market, it is a nice upward trend. It's actually starting to go a little bit parabolic, running away from the trend line, and so that makes for an interesting opportunity. Now, why is the Canadian market strong? Gold is a big reason. You can see here that this is resistance, this is a breakout. Here we have rising bottoms, that's an ascending triangle. You can see volumes picking up. So after gold has gone sideways for 3 or 4 months, it is now breaking out and likely to continue higher. So I think gold is an area of opportunity. On the other commodity that I always like to look at is oil. It's kind of going the opposite direction. You see falling tops, which is pessimism. So in the short term, not all that great. If we look at the 3-year weekly chart, we see it's still stuck in the sideways range. It's been in there for a long time. So although the short-term picture isn't super good, it's not a big concern yet, just because oil has been sort of oscillating in this zone for some time. All right, let's move along and take a look at the chart of currencies. The US dollar we'll take a look at. And you see here the US dollar dropped. You're going to see why in just a moment. But for now, we can see that we're generally sideways, but we do have some falling tops. We also have some rising bottoms. So it's a relatively neutral chart. Moving along to Bitcoin. We see that over the last 6 weeks or so, we've been heading lower. We broke this little daily upward trend line. If we go to the 3-year weekly chart, we're still in the long-term upward trend. So I think the long-term picture is good. The short-term picture, a little bit negative. Finally, let's take a look at TLT. This, I think, is the most important chart of the week. This is the US bond market, and you can see a big jump to the upside. That means that the market is beginning to price in a drop in interest rates by the US Federal Reserve. And so we have rising bottoms, which is a sign of optimism, breaking to the upside, and that's the reason the US dollar is dropping. That's the reason the small cap stocks are faring better. So let's get into my ratings then. US large cap bullish on both time frames, but NASDAQ short-term neutral because it is underperforming. US small cap, Canadian stocks, gold bullish on all time frames. Oil bearish in the short term, long-term neutral. US dollar neutral on both time frames. Bitcoin bearish short term, but neutral long term. You could almost say optimistic long term. And then bonds short term bullish and long term neutral. We haven't seen bullish on the bond market for a long time. All right, let's get into the trade of the week. This is an example of a stock that we traded in the active live service that we have available at Stockscores.com. You can learn more about that at Stockscores.com. And this is a stock on Friday that made a pretty decent little move. And the reason we were watching it first and foremost is because it was abnormal. Now I have a plan. I have a written set of rules that I look for. It starts by looking for action candles. So where you see these little pink and yellow dots, that means there is abnormal buying pressure on the stock, and that is the reason I want to watch it. But I don't want to chase stocks. I want to buy them when they're ripping higher. I want to buy pullbacks because these type of entries are FOMO entries. All right, we don't want to do FOMO entries. Instead, I want to buy this action candle breaking the pullback from a rising bottom. That's a sign of optimism. This is a sign the buyers are taking back control. And in this instance, the stock moved from just a hair over $3 to $4 in about an hour. So a 33% gain in about an hour. Not a super day trade. We certainly get much bigger moves than that, but still a nice solid trade on a relatively slow trading Friday. And it all starts with abnormal activity, having a written plan, and avoiding the fear of missing out. Well, hope you've enjoyed this week's video. If so, do me a favor, click on the like button, subscribe to the channel, and as always, trade well.